Good morning, everybody. This is Bryan Caprice. This is going to be our Monday morning market breakdown. I hope everybody had a great weekend, a good Father's Day. My voice is a little out there. We had a Father's Day and final lacrosse tournament of the year. So voice is shot. Great weekend. The boys had a lot of fun. And being a dad for me, that's one of my favorite things is when the kids are having a good time and again, out there with their friends and, for me, my case, twins. So what we're going to do is I'm going to break down what we're looking at this week. So last week turned out to be pretty interesting. News releases were, there was definitely some Trump setups that we talked about. Last week we had the issue, if you remember, with the charts. So we had switched everything around with completely blank, bare charts. You'll notice the white backgrounds. Well, everything got sunk back up. We are back onto our original charting platform. So you'll be able to see some of the old kind of areas of interest that we were looking at. All right, let me jump through real quick so we can go through today. So for those of you that are new here that don't know me, I'm the president and CEO of Keep Trading Simple. Our job is really what we feel is to simplify trading and remove a lot of the distractions that the professionals tell you have to be successful. Many of those tools I find do nothing but complicate people. I typically try to remove those tools and, basically go at trading it in its simplest form. You always hear the greats say, keep it simple, go back to the fundamentals. And in trading, we're not talking about the fundamentals behind the market. I'm talking about what we see, price action. All right. So I'm definitely a busy guy. You can see obviously lacrosse. I got a little one in this picture. She's one in 2 weeks now. So she is not walking but crawling everywhere. And I take care of her during the day when I'm not looking at charts. So for me, life is pretty busy. One of the things that I pride myself on, and again, this helps in what our discussion is about today, is I created a couple different programs and kind of strategies. And one of those, or actually two of those, would be considered kind of my pride and joy: the 30-minute trader program as well as the 5-minute binary courses. Meant for people that are on the go. Okay, even if you're a futures trader or maybe you have a specific Nadex strategy that you like, I created these for people that want kind of an additional thing to trade, something else, or maybe even if you're new, you wanted something, but you're not quite there to sit there all day. You're maybe in a 9-to-5 job or an 8-to-6 job. Those are meant for you. So a lot of my analysis is based off of looking for if this, then that happens. Okay, I'm not so much of a market order, get in now type guy. If this gets to here, I'm in. So you guys will see that inside of the analysis today. All right. I was in the advisor division with one of the big three banks. I think it's actually one of the two big banks now. I think they've moved in the second place from third place. Didn't stay there long. I realized that advisors are not really taught how to look at charts or how to trade the markets. I got in there and knew those things, and I was asked when we're going to do that. I was trying to get that one leg up. And they're like, no, we don't do that here. Nobody, we don't teach anybody how to trade. You just follow what, our internal, advisory group tells you. I was like, oh, not what I thought. So didn't stay long. I spent years traveling around teaching people how to trade. So if you guys have questions, don't hesitate to ask questions. If I can't cover them during the broadcast, at the end, I'll give you guys an email address. You're more than welcome to bounce emails off of me if you like. Okay. Let me give you Nadex risk disclaimer. Now, trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purpose only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility, and past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, which we'll talk about most today, stock index futures, and commodity futures. Now, trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. Now, this is one of the reasons I love Nadex the most. I started back in the 2000s, understanding multiple asset classes. I started with options, I started with stocks, went into options, moved into futures. Actually, I found currencies first and then learned how to do futures as well. And I realized that in basically every other asset class that's out there, there's things called margin calls. And one of the things I liked most about traditional options was if I was buying, couldn't get those. I knew what my risk was. When I found Nadex, I saw the same exact situation where it didn't matter what happened. Stock could fall, currency or index could fall all the way through the floor or double or triple in a matter of seconds. And I was protected. Very important to understand. And there are strategies you can use to actually take advantage of that are great. All right. So let's dive in. What I do every week is we dive into what I would consider really the top 3 news releases to keep an eye on. I will go through the kind of the full list this week of the major market releases, but these are the top 3 that I want to draw some attention to. First one being Wednesday. Okay, Now, the reason why this is important is the market typically gets a little bit, what I would say, soggy before anything FOMC based. Now, where we are right now with FOMC, all right, the big question is there going to be a cut? Okay, nobody's expecting a cut this time, but they're looking for a cut. The FOMC and the president kind of went at each other. He said, don't raise it, you're going to crush the market. They said, nope, we're raising it. We're our own body. They raised it. The market started seeing some issues. Things are still going on. Data is starting to come back where it's not as good. And now they're talking about rate cuts again, kind of going back with what they originally said. So question is, when is it going to be? And this week, I believe, is when we're going to get kind of that insight. Now, if it's a surprise release, oh my gosh, it's going to move the markets, all right? The overall consensus is they are not going to change it this week. But again, surprises happen in the markets, as we all know. If that happens, there's going to be fireworks on Wednesday, okay? Now, what I'm expecting, though, is I'm expecting that we're not going to have the rate change this week. I think it's going to be pushed out a little bit farther. What I expect is it's going to be unchanged, and then all eyes are going to be on the markets, okay, at 2:30 for that press conference. During that conference is when we're going to probably get the insight. It's going to be something that they say, and that's where we're going to see the fireworks and explosion, because once we know when it's going to happen, then the market is going to try to price itself in advance. And trust me, people are going to get in front of this one. Rate changes are a very, very big deal, especially when they're telegraphed, okay? As soon as we know when they're coming, the market immediately starts to go into reactionary mode, okay? A lot of people think the market waits till the news is already released, but most time it's already prepared for what the kind of forecasted number is going to be. The fun part is, and this is why I love news so much, when the forecast is wrong, which it is about 70% of the time, that's where we have news explosions, okay? And people think it's the reaction. It's actually just the positioning, okay? Most of the time we can see it ahead of time. So with that being said, I expect the markets to be a little bit slower today and tomorrow, just because, again, one, Father's Day, so most of the dads are, taking advantage of the presents they got yesterday. I think I read somewhere that they said alcohol and whiskey are one of the most popular Father's Day presents, besides a coffee mug. I think coffee mug was number one. But, a couple dads are a little bit slow today. So trading will be a little bit slow this morning. But again, all eyes will be on FOMC, so I think Tuesday will be a little bit slow. Going into number two, Great Britain pound retail sales. It's super early, or it's a little bit late if you're a West Coaster. And that's going to be at 4:30 a.m. That's a situation where if you don't want to be up, you can use some set and forget type trading mentality, some overnight trends. Anytime you're looking at things in the middle of the night, you can kind of set what I would say, you can use working orders, right? Set a working order for things, and there's a couple fun things you can do with some out of the monies with working orders. The reason why I'm picking this as number two is Great Britain is obviously in a situation with Brexit where they're still in a volatile state. They can go in a lot of different directions. News can definitely move them pretty quickly if need be. Again, with May, stepping down, there's a little bit of a battle back and forth, and we'll kind of see where the chips, we'll see where the chips land at the end of all this. But any type of news, particularly something like retail sales, which is quite a higher kind of powered event for everybody, definitely has some potential for some movement there. It's forecast right now. It's forecast to be lower, and that's a big kind of telltale sign that they're expecting it to be bad and they're preparing for bad. So, we'll see. Okay. The third one is going to be on Friday. This is 8:30 a.m. This is the CAD release for core retail sales. Now, Fridays are one of those interesting days where we do have dual releases with the US and Canada at 8:30. This week, it's not so much. The main release is going to be the core move. So what you're going to look to be doing is playing this with the dollar CAD currency pair. Again, retail sales is a number that definitely can cause some movement. I think this is going to be one of the top three. I think that'll give us the biggest movement. In looking over kind of all the CAD news this week, this is really the only, there's CPI on Wednesday morning for CAD as well, which can be a good one because, obviously it's inflation based. But I think Wednesday morning, I just think everybody's going to be focused on FOMC, okay? I think that'll be a big piece of it. So I think the kind of a single kind of shot at a pair, I think it'd be dollar CAD on Friday on this one, all right? So let me drag this over real quick. Okay, here's a news site. If you guys are not using Daily FX, get over there. A lot of resources, a lot of things over there. go over to calendar and charts. Okay, go to the economic calendar, and when it loads up, there we go. You should be able to see it. This is going to give you the economic calendar for the week, but we need to do a little bit of work. Okay, we need to get in there and go into the filter. First thing, obviously, change the time. It always helps when you have the correct times. And when you choose a time, it's not where you want to be, it's where you are. You know, you see things like Buenos Aires and like, oh, that could be cool. Hawaii, I'd love to be there. But unfortunately, if you pick those, guess what? Your times are going to be a little bit weird, right? So I am in this guy right now, okay? Another thing, go over to filters. We don't need all this stuff in here. I'd get rid of the Mexican peso. We don't need that. Get rid of low. Low typically is just nothing. It's not even a blip. Leave China on there. Anytime you see Chinese news, it has the power to move Australia and New Zealand. So leave that up there. And then again, particularly with the United States, with the alleged trade war, again, we leave it up there for to affect this. So as you guys can see, Monday is obviously not real full. You never expect Mondays to be too full. The only thing that I can see being anything really is this piece right here. Okay, Draghi speaking at 1 p.m. Eastern. Again, depending on what he says, if he mentions slowdown or anything else, he's in Portugal, so it's not like he's in one of the big powerful nations. So I don't think it'll be as impactful. But you never know. Just watch out for it. If you have any positions on, just make sure you're protecting your profit in those things. Oh, go to weekly view. Sorry about that. Okay, going into Tuesday, you'll see there's a lot more. Okay. Again, Draghi speaking again. He's doing the introduction. Again, it's an introduction. I don't think there'll be anything that comes out of that. You'll see a lot of Eurozone information. It's all mediums. Again, Germany is always an important figure. Anytime there's any type of expectations or any type of numbers out of Germany, look at those. If Germany is bad, it's going to affect the euro currency. That's the driving force there. You'll see housing, building permits. Again, these are expected to be zero, which are never good, but these are typically not huge movers. If there's nothing else going on, then the news people will be like, hey, what about those housing starts? I mean, it's kind of one of those things. It's a secondary news release. Again, you'll see, again, this is more of the meeting panel, not tons, right? Going into Wednesday, this is where we get some actual releases. A little bit of pound news, which is good. Consumer price index is always a good one. These numbers, when they miss, can lead to some nice runs there, right? So we're looking for these. CAD also has theirs at 8:30. Again, Draghi doing the closing speeches, not worried about it. If you're an oil trader, remember oil inventories are on Wednesday. And then again, you guys can see this block of high, this huge piece right here, right? And this is going to be all FOMC information, okay? Now, remember, at 2 p.m. Eastern is when the rate changes and everything come out. That's what these numbers are. And again, there's expected to be no change. But then at 2:30 is when, Powell holds the press conference, okay? That's when we're looking kind of hinging, listening to what he's saying. That's when the markets get spiky, okay? So again, same thing that as I mentioned before, if you're in the market and you have positions on and you have profit on, make sure you protect that profit a little bit, okay? There's nothing worse than being in a trade, being really, really close, somebody speaks, and all of a sudden, bam, it goes back and becomes a loser, okay? One of the things that I always work with traders about is knowing when to get out of a position, okay? When you have something like FOMC, sometimes it's safer to shut it down early than take that risk. If you're looking to capture 10 and you're at 8 and you're really, really close, why would you risk 8 just to make that last 2? Okay, it's not worth it, particularly around news. Remember, your goal as a trader is to protect what you have, right? Focus on the protection, and that's how it grows, all right? Going into Thursday. Okay, Thursday. This is where you're seeing the, Bank of England rates. Nothing's going to change here. This stuff goes early. A little bit of U.S. data, but it's all considered minor. Again, another speech. And then, again, there is Japanese consumer price indexes as well, but that one tends not to be as much of a mover as the other one, since most times that is a quote pair. It's just not, being the quote, being kind of the weaker one, it's not a big driving force. It's kind of more of a reactionary force to other currencies. So that's why that's not on the listing. And then going into Friday, okay? Again, Friday, you guys can see it is basically packed with a block of medium news, okay? Again, existing home sales, things like that. I mean, they're expected to be good. This can kind of foreshadow where we will end the day, but I'm looking at this one right here, CAD. Because there's nothing else at 8:30, CAD is the only thing. And again, it's expected to be down. It's going from 1.1 to 0.2. I think this could be definitely something that moves the market, particularly the dollar CAD. All right, so that's what our target as far as news goes. Let me lower this right now, and we will the slideshow, and let's go to some of the charts. So let's go back to the top. And those of you that don't know, what we do is we will run down the different Nadex pairs. Let's see. All right, we're going to start at the top here. We're going to start with one of my favorite pairs to trade lately. And again, this was kind of where we were forecasting this would go down. And this was actually a target that we're looking for. This is not an entry. That's why we left it in blue. We couldn't update it last week, obviously. And again, I save this as each week for you guys so we can kind of try to stay consistent here, right? So looking at the bigger picture right now on the daily, okay, this is one thing that I talked about. If you guys remember back, you guys remember this big wick that we were talking about? We talked about this extended range body candle was a target for us. We thought price would go right through and then get stuck at the bottom. And the big question that we had is what was going to happen when it reached this big wick right here, right? This is a very fast, very large, very extended range wick. When you're reading price action, we actually use wicks to determine where their buyers and sellers at. Now, for me on this analysis using the daily, the 4 hour and the 5 minute, actually this should be the 30 minute for what we're doing today. We're using this more as a trend indicator. And you guys can see, you know, trend wise, we're kind of at the bottom of the range, right? We've been in this downtrend, we've been pushing. It really kind of hit a lot of kind of, you know, a lot of kind of potholes, little boundaries, right? It just kept bouncing right off the bottom of that area where that wick started. And now last week it managed to start pushing back down, and it's just kind of, you know, we're kind of stopped right here, right? We're in a kind of a pausing period. And again, this is definitely a US weakness here that was kind of doing this. All right, so we're kind of at a stop holding period, but you could say that we are in a downtrend setup, right? Now, when you're looking at the way the market moves with impulses and corrections, impulse correction, impulse correction, impulse correction. So I mean, it did the same thing, right? Impulse correction, impulse correction. Again, we're typically on lower time frames looking for setups. Now, Mondays are always a little bit weird. Obviously, you have gaps over the weekend. This is where we're at right now, okay? Things that I'm looking for, again, here's where we ended Friday, okay? Right here. Typically, when you see this, what we're looking to do is for some type of gap fill, okay? Particularly in the price of the trend. We're pretty far down here. I mean, we are about 100 pips down. That's quite a retrace up to be able to grab this. This may be an area that we continue to mark off and look for another day. Okay, now we've pushed back up, but then we pushed lower, and now we're pushing higher. So we're basically kind of in a consolidated kind of sideways period. For the fact that we obviously have a higher high here based off of this position, and we have a higher low. Okay, which is green right now. I mean, if it continues to push, then it'll change. But you know, so for me, what I'm looking for is any type of break below basically 74.50, or I'm looking for a break above 74.78. To let me know that we are now getting 2 consecutive higher highs in a row, signaling a trend change and potentially looking for setups to run this back up to 75.60. Okay. And again, we need a little bit, you know, traders to come in. You guys can see even on the 30 minute, obviously we had the reactionary force. You know, this is where we kind of came to, went up, went down, hit that area base, drove back up, ran into this little area right here. Okay. If you guys can see this little, not a bad little, I'll do this one real quick here. There. You guys can see we ran right off of that area, and now again it's just flatline. So we need some more energy in this one. Again, when US traders come online, particularly the gold traders, that will kind of help us start moving this pair around. All right, so obviously nothing right now that we are kind of looking at. Now going over the little brother, okay, this was an interesting pair. We had marked off the same type of profit target area and made it about halfway through. And what did price do? It rallied back up, and we talked about this. It went right back up to grab more orders in this descending period. And where are we right now? It did the same thing. We had the dollar kind of being pushed back down again. This one's, you know, where we are right now. It's still red. You know, it's been very, very strong, not too much of a pullback. And we're right where we ran into buyers last time. Okay. So this one gapped up in the opposite direction of the trend, right? You guys can see it gapped over here and then kind of came over. So in this one, what we're looking to do is we're looking for a break of the low. I think this one will continue lower. This one is a little bit different in the fact that the last pair, right, it was stuck in the top part of this wick. This one has driven down and found the hidden orders in the middle of the wick, okay, in the middle. Okay, so I'm looking for a break of this to start retesting. Now, what I'd like to see, though, is I'd like it to push it a little bit lower, pull back up, and then drive through. Okay, a lot of times, it uses most of its momentum to break through the area of buyers And then once it's through, it sets its trap and grabs all the support and resistance traders, and price will retrace back up again, grab a couple more, couple more orders up top, and that's what it uses to kind of pull that momentum down. Kind of like what you've seen down here, right? If this is the level that, say it needed to break this, 68.75, it will push through, it will come back up, it'll set its trap, it'll get the support and resistance traders breaking below, it'll push back over, come back up, stop them out, take their orders, and then it'll drive it way, it'll continue to push back down again. So looking for somewhat of a continuation pattern in this one. And again, this is going to be also kind of gold based, and again, Chinese news will move this as well. And again, obviously any US, anything that mentions inflation, gold, China, trade war, any type of political indecision that people would want to, have a flight towards gold, that will affect this pair as well. You can see obviously in this case, it's obviously pushing down. Not a bad trade. Okay, I think there'll be a really nice setup in this one later in the week. Dropping back down to, let's see, we're gonna go Euro Pound. Okay, Euro Pound has been literally a rocket ship. It has just been going and going and going. And not really stopping, right? We had a little bit of pullback. If you check out this run, we talked about it up. And again, this was a situation. We had this area. It actually broke through, pulled back to grab a couple more orders, and that's what it used to catapult higher, okay? Now, on this one, okay, we actually had a little bit of an area here that it kind of had some problems with and actually started to retrace. We are basically at the top of the range. You guys see this basing level up here? If I had to mark this off, you know what? I'll just use this one. I'll drag this up, okay? Looking for areas of basing, it's undeniable that there's some basing in this area, right? Price came down, it actually pushed up, grabbed more orders and dropped. We are starting to approach that area at 89.50, okay? You can see obviously right here, a little bit of a stall. 30-minute, it's just doing nothing, right? It's just more or less going sideways. It is trying to grind back up to the high where we ended last week. Where it started again at this peak. I'm very curious to see if it has the power to break through, because it did not in here. And again, this is Monday with no US trading involved. If we get up into this area, this 89.50 area though, I am going to be all over these bottom two charts looking for some type of a confirmation for short bias. And the reason why is because when you look at this, right, this has obviously been the top range and this has obviously been the bottom range, okay? A lot of times you will find that things have a natural kind of top and bottom that they follow back and forth. This one, I believe, in my opinion, is no different. The reason why is because when you have institutions and banks that have to keep things within certain parameters, it's kind of like if you guys know anything about golf, right? You have golf carts, but they have governors, right? Golf carts can go really, really fast, right? But that's why they have these governors. If they go over a certain speed, they can flip. Well, guess what? Banks and institutions for their companies want to make sure that the prices of the currencies are within a certain area. The central banks do this to make sure that they don't basically hamper or put a crutch on their business for import exports. I believe that this upper 90 area is one of those kind of circuit breakers where they're like, hey, listen, we got to do something different here. Obviously the pound can get so weak that we drive through it, but again, it's going to start affecting things. If the pound gets too cheap, there's going to be a lot more pressure on the European Union because the pound's going to be able to ship to them, but it's going to be really expensive for the European Union to shoot back to the pound. So for me, it's definitely something I'm looking for on this top side. Obviously no entry right now. It's, again, it's kind of in a holding pattern. It's a stall pattern. It's Monday. Okay. Just something to keep an eye on for this top side. Looking at Euro Yen. Euro Yen situation is a little bit different. Obviously, we are more heading to the downside. Again, this one you'll see that we have pushed down into this range, right? Here's that crazy wick. Okay. We're pushing down and this is where we're at. And again, this top side where we're at right now, this bounce, you guys can see in the price action here, these wicks, you can see that it came down, hit them, and that's what it's bouncing off of. So not a surprising area for it to bounce off of. And you can see last week, the end of last week, this thing just was straight down, right? It was just boom, okay? So I do think this is a bit of a turning area. 30-minute doesn't look bad either. You guys can see we're at a level here of basing, so I wouldn't be surprised if this coincides with US traders coming online, it runs into this, and then we start to push back down again. This obviously has the yen in it. Whenever you have something with the yen, obviously it has exposure to the US market. Obviously, it's just like the dollar yen. It will kind of track with the overall market in the US. So this pair is no different. With Draghi speaking so much this week, he's doing a lot of intros and exits. I don't know that his speeches this week will move this pair too much. but we'll see what it kind of does now. The way that this formation is on the downside with all the wicks on the top, descending down, typically means that there are definitely some sellers in this area. Areas I'd watch out for is this 122.40 to 122 kind of 60 area. The way that this came down and based and then rocketed out of there, I think there's some hidden orders stuck in that area, about 40 pips from where we are right now. Until that time, I think we will retrace up. I think we'll get stuck and kind of slog down. We'll see where it goes from there. This one is again, I do think we will make a push. If we start turning red, I'm going to be looking for targets down to this 120.70 area. I do think this is going to be a trap area for support and resistance traders, though, so be careful. All right. Looking at pound yen, the beast. Okay, the beast is kind of the same thing. It is actually pushed through the bottom side a little bit, right? It actually gapped lower. Okay. You guys can see it down here. We started the candle here. We ended here. I can move this over just a little bit for you guys. There you go. You see we ended here. Candle, red candle closed up here. Boom. And then it's basically where we closed on Friday. So hasn't gotten the momentum or movement. Here is our target. We need to go a little bit more. We need to go about 90 more pips for this one to be able to hit that kind of extended range candle that we were shooting for. And nice example too. You guys see this base here? Okay, we had down, pull back, down, base, explosion. It went back up. It pulled the base, and that's what drove it down lower. Okay, so this one is still continuing to the downside. This pair I do feel like will be volatile this week. Again, all eyes are kind of over there. Anything bad, it just exacerbates this pair. So again, we talked about the retail sales numbers being bad. That could be the force we need to continue to drive this pair. Okay. Again, bringing this back down again. Okay. Let's see, pound dollar. Okay. So pound dollar. This one was a little bit different in the fact that it did not have the really extended range wick. That was the next candle over. So this one only had a very, very tiny body. And we marked that body off as that should be pretty easy to go through. And then it was going to run into the wick. And again, that's where the surprises were coming in. It blew through, it touched, it went all the way back up, and we're right back to that same area. So we know there's buyers in this area. Am I ready to take this one long? No. Okay. I need to see what it's able to do at this point. I want to see if it's going to continue to grind down and push and test these buyers. And again, if we push and test the buyers and the buyers fail, then again, I'm looking to take this one short. But you can see even down on the 30-minute, nothing exciting. Right here is where the gap ended, right? It went up, it kind of just flatlined. It went back down and tested where we were at the bottom, came back up right to the same basing area, and is now kind of smack in the middle. So this one really needs U.S. traders to step in, okay? When they step in today, we'll see how they're feeling, if it's going to be slow or not slow. Okay, this is one of the two pairs that you can also play with the FOMC. If you guys remember me saying in the past, before FOMC, go look at euro pound, see which one is stronger or weaker, and then pull up the euro dollar, pound dollar, and they'll typically look the same. See which one's weaker or stronger, and again, I'd be looking for the stronger of the two pairs to play that day. But these are one of the two that I'd be looking at. Okay. Let's drop down to dollar CAD. So dollar CAD is a late week play. Dollar CAD is retracing. So on the daily, this is what we would call a racetrack. Okay, when you have two candles like this with almost no wicks, and I remember we talked about this last week, because we had dropped so far down. Here's where the week ended last week. Sorry, 2 weeks ago. So when we started our analysis last week, we were here, and we mentioned that anytime you see large extended range candles with no types of pullbacks, they are candidates for what we call a racetrack retracement. That's exactly what happened. You had your 1, 2, 3, 4, 5, and we went all the way back up. We retraced back up, and this retracement was worth what? Right? We're talking about 164 pips. Okay, so nice retracement last week. Okay, a lot of things you could have done with this one. That's a lot of strikes, right? You know, you're talking about over 2 strikes on a weekly, but on a daily basis, a lot of movement there. Now, where we are now, we've pulled back up, and you can see we're in an area of basing. And again, kind of looks like a cliff here, right? If you look at this one, up, 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 failure to go higher, failure to go higher. And again, it's smashing the buyers on the bottom side. Well, if we miss, this is what I'm looking at. You got all this kind of action in here, right? I mean, you got a little bit here, a little bit here. But I mean, you know, if it wants to go back to equilibrium, we're going back down to 133.30. Okay, you're talking about a 70 pip move. This could be something you're looking for in the daily trade. Again, with CAD news, this has the power to do that. The reason why I'm not looking for it to continue higher back up to some of these higher quality levels on the 4 hour is just because we had the failure to go higher, failure to go higher, failure to go higher, and it's just kind of consolidating. Okay, big shelf, eventually gravity is going to have to step in here. As well as you guys see all this pink up here. This pink is an unfilled order indicator. It's showing me I've got a lot of sellers up top. Okay, that's a lot of people pushing back down. Again, that's going to be the wicks that are kind of hidden there on this left side. Okay, that's what I'm looking for that. Let's drop down to the Swiss. Swiss is one of those pairs that it's kind of a. I don't play it often. Okay, you can get into some nice trends and then it just flatlines and kind of stabilizes. This one has been rallying back up. It is inside of a 4-hour selling zone right now. It's not the highest quality selling zone though, unfortunately. It does have the 3 wicks that I'm looking for, but it also has a 4th in the middle of it. So it's kind of a level on top of a level. Makes it a little bit kind of, I don't know, makes it not as strong of a kind of turnaround point. We are getting mixed signals as well. I mean, it's telling us we have an uptrend set up on the daily, uptrend, but it's an anchor break, meaning that, it's a trend reversal inside of an area where we have had previous sellers. That's not a bad trade typically, but we're also running right back into a wick, which means we have some buyers as well. So for me, this one is going to be US based. The Swissy numbers don't typically move this one. It is international kind of geopolitical events. That's what moves this pair. Any problems with that? So if there's any trade war talks, this one will obviously move. Anybody decides to shoot some missiles or test some missiles or send ships somewhere else, or I don't know, maybe when the market's open today, the U.S. hacking in Russia thing will come back up again. Things like that can provide movement in this pair. Obviously, this is a flight to safety trade, and I don't think people are worried about World War III right now, but that's what will move this pair. I don't really love any of the setups for this one. It's retracing back up. A little bit of sellers right above it, right at the parity mark. But parity is a weird number. People will always flock to parity. Okay. All right, dropping down to the last guy, dollar yen. Okay. Across dollar yen again. This is going to need the U.S. market to open before we see much movement. You guys can see last week wasn't super exciting. It just kind of ground sideways. I was pretty excited. I did like this, very, very large kind of extended range piece. But right now, all eyes are on that FOMC number. It's literally just kind of flatlined. I've been in this trade. I've actually taken this trade long and then just taken myself out of it with a break even. It's lost so much conviction. The one area that I was originally looking at and was worried about was this right here. And that's kind of what we bounced off of. And I was hoping we pushed deeper into it, and when it pulled back and it just stopped. It went back down, it filled this gap, grabbed more orders. This little area right here, this 108.80, the way that it was formed, I was pretty worried about it. It was very conflicted. I was like, man, I want to take a short off of that one, but I didn't last week. I actually got very busy at the end of the week and was not able to take a short off of it. But it's an area that if we break through the top, I'm looking for a retrace down to go higher, to push higher. This actually should be up a bit, probably up in there. That was from a prior draw. Yeah, it's probably going to be up in here. That's kind of where our target's going to be. So if we do break, I will look for a retrace. But right now, again, basically sideways. This is the FOMC slog that I'm talking about. I think after Wednesday, we should get some good movement. If there's any blockbuster news releases or statements or tweets or anything like that, I do think we will see some movement prior to that, but for the most part, I think this won't be a little bit slow until we get FOMC. And this is one of you could look at this at FOMC as well, just because, as you guys know, FOMC is going to affect interest rates. Interest rates affect the stock market. Okay, and I'll close with this one. If rates are going to remain the same and the market feels like that is too high, market will go down. If they mention they're going to lower rates most likely next time, lower rates is better for the stock market. That will drive the market up. Okay. As you guys heard me mention, I think this is all part of a political scheme. They want the market to be doing bad. They want the rates lower. And then all of a sudden, they're going to the trade war is going to shut off right before the elections. And the market is going to go absolutely crazy. And that's going to be what the elections are about. Is look how much wealth has been generated for the country. That's going to be the election thing. So I'm going to say it right now when it happens. You guys can say, Brian, you were right. So we'll see how it works out. So that's what I had. This one's going to be a little bit slow. And like I said, FOMC is going to be the theme of the week. All right. All right. With that being said, if you guys have any questions, like I said, it's always a little bit harder in the morning to do that. You guys are more than welcome to shoot over to keeptradingsimple.com. If you guys want to get the easiest access to it, is if you guys click this button right here, it says gain access here for Discord. Discord is a chat room that I use with my traders. We're actually integrating people across. You guys know that I was with another group. I'm still integrating people in. That's the easiest way. Right now, there's not a ton in there, but I'm able to answer questions very, very fast. So if you have questions, shoot over there, see what we're doing. And again, you're more than welcome to email me as well, support@keeptradingsimple.com. And again, Instagram page is new as well, but we try to post educational things over there about different types of setups to help you guys start looking at things a little bit differently. All right. So with that being said, 8:05 on Monday morning, you guys have a good week trading. Again, happy Father's Day to all the dads out there, and I will see you guys same time next week. Thanks again.